Hi, everyone, and welcome to another episode of Unlocking Venture Capital. I'm here today with Marlon from Blue Impact. Hi, Marlon. How are you doing?
I'm doing great. Thank you for having me, Sydney.
Thank you. So Marlon and I actually met at an event that was very into impact and diversity, and there were a lot of great fund managers there. And so I'm so excited to have him on here on the podcast for him to talk a little bit about his supply chain venture capital fund. So please give us an overview about what is investing in supply chain like and what your thesis is.
Yes, so we are a specialist fund in supply chain logistics technology, early stage. So we leverage this experience that I've had operating in the industry. So I've been operating as an entrepreneur operator for over 20 years. So started a couple of companies in the industry, including an airline, today one of the largest airlines in Latin America, a company called Azul. And modern logistics, an integrator with freighter aircraft, warehouses, technology from automotive trucking. And so we're focused in, while I operated these companies, we saw that the systems were still very legacy, that, the whole tech wave hasn't caught up to the supply chain as in other industries, for example, as in banking and finance. And so what we decided to do is put together Blue Impact Ventures that's focusing on what we see as the digitalization and automation of the supply chain. So there's three themes that we're really focused on. One of them is optimizing the supply chain. So solutions that optimize, reduce costs, make the supply chain more efficient and resilient. So that's one. The other one is decarbonization, which actually goes hand in hand with optimization.
Yes.
For the most part, what we've seen is because the supply chain in general is the biggest contributor to emissions. So, and not a lot of people know how big the supply chain is, even though we're niche specialized.
Mm.
The supply chain is all of the manufacturing and distribution and logistics that takes place. And so this is the backbone of the global economy. And we could get a little bit deeper into why I think that. And so there's a massive opportunity in using the supply chain as a way to decarbonize.
Hmm.
And the third is the global dynamic that we're living, which I think is one of the uh, biggest generational shifts in our lifetime, which is the manufacturing capacity getting fragmented out of China all over the world,
Right.
and Latin America, especially Mexico, being disproportionately benefited. So the thesis of our fund is identifying these technological solutions that are building this glue in a more America-centric supply chain, and in doing so, are building it in a more sustainable manner. So that's in a nutshell what we're investing in. We come in early because we are a specialist fund. We assume a little bit more risk than others because we understand the
Yes.
intricacies
Have the industry
of
expertise.
exactly. So
Yeah.
that's
You know what I really love about what your fund focuses on is not just that you were industry expertise, but you also have this greater mission that encompasses it. And it speaks a lot about, where you come from and who you are. And so we are seeing, a big trend of not just emerging funds that grew out of 2021, but also that more and more funds have to have these kinds of specializations, these
yeah,
industry expertise, these,
yeah.
deep industry knowledge that you have because you ran an airline and multiple other businesses. But one of the things that we also don't see, which I have found in your fund, which was very special, was the intrageographies. Okay, so actually crossing borders and going into other countries because it's so high risk and it's so very very foreign to other people per se. So that is a big thing that you have taken on upon yourself in the way that you are going to be doing due diligence that way. So walk us a little bit across, how you do due diligence because you focus on Latin America and US, right? And
Yeah.
that is enormous cultural differences, economic differences. every kind of difference you can possibly think of. So your due diligence process must be so different and vigorous compared to other people who are like, I have worked somewhere, I'm not going to say who where, at a fund where the boss is like, we're going to invest in places we can drive to. Okay. This is what we're going to do. So you taking this huge, risk on your shoulders and this weight is something that is, of course, going to have huge impact for everyone.
Yes, yes. And so I want to answer that twofold, right? First, yes, we invest in Latin America, but the majority of investments are US. So as a way that, so I would say more than 70% of our 80 or 78% of the investments will be US. Uh, the Latin America portion, I leverage my experience in the region. So I would not be investing in Brazil and Mexico if I hadn't operated there. So having been in the trenches in Latin America gives me gives me a competitive advantage to be able to do due diligence and kind of get into opportunities, but at the same time mitigate some of that risk.
Mm-hmm.
And how that risk is mitigated in Latin America, especially, but in the US as well, is really driven by a collaborative approach, like having other VCs on the cap table.
Yeah.
I do like to meet the founders personally, get reference checks. So getting, I don't, especially in that time, I don't like to be like a solo investor. Usually opportunities come to me through the network as well, which also kind of filters out some of the noise. And so from a due diligence perspective, we do apply this due diligence kind of across the board, US and LATAM. We have our checklist. We want to go through and make sure that everything's legitimate. What the founders told us is real. I don't know if because we're probably one of the few VCs that you've interviewed that have invested in LATAM. What we find in LATAM, we actually have founders that, because it's a developing region, they have more patience for due diligence.
Really? Okay, let's walk through an example. I've
Yeah, because investors in LATAM, I would dare say probably investors in other emerging economies like India and Africa, people know that there's a lot of pitfalls, that there's a lot of issues other than the startup that need to be looked at, government, contracts. So founders know that, right? And so some of the companies that we've come across, they understand that, they have robust data rooms with information in place. They have more patience to sit down and go through the diligence, and as a U.S. fund investing in Latin America, even though currently, we're still not at the ideal check size, our check size is still pretty relevant. And once you
your
convert
check
it to
size is
local,
whatever the market will accept. So if founders
exactly,
accept it, that's the market.
exactly, and so we convert it to local currency. It becomes more relevant also than
Yeah.
for U.S. companies. So those two factors allow for us to get a little bit more time with LATAM founders. Obviously, when you have a breakout founder, it's like second time founder, and then they're able to create that momentum with US VCs, then it becomes kind of like a US founder operating in Latin America, and they'll give you the corresponding diligence time like everybody else.
Yeah.
But I would say that's the minority. That's the minority of deals that you would see in Latin America.
Mm-hmm. Okay, that makes a lot of sense. That's really great. And you were a former operator, and we just love to kind of understand, your journey going from. I think your last company was the airline before you went into VC, so a huge shift. And you just walk us a little bit through about your journey and why you decided to start this fund, and how that being an operator has really helped you along the way.
Yeah, that's a question with a big answer.
Okay.
So I'm going to try to be as quick as possible, but it really, what I'm doing today comes down to my personal story,
Mm,
which I think I briefly mentioned it to you, but I was born in Colombia.
Mhm.
My parents migrated to New York, and so I was, I went through the immigrant journey, and I was very fortunate, right, to end up getting to a great high school, great college, and I had people along the way help me get to where I was able to get to, right? And so when I was at Brown, I had the ability to kind of mold your major into what's really your passion. And at that point, I was like, I want to be able to give back with all this experience. I know it's very idealist as an 18-year-old in college, but that's kind of what I had in mind. So I ended up studying international relations with a focus on economic development with a sub focus in Latam, sub focus Brazil. And so
Your
that
major was exactly your career? Like, how does that's never
exactly.
happened.
So that never happens. That never happens. It was very intentional because of my personal story,
Okay.
right? Because I wanted to somehow give back. And
Yeah.
that kind of major would kind of put you in the track to like go to work for the World Bank or something like that. Uh, so I was fortunate to get into Wall Street. I did investment banking at UBS, and by call it fate, call it luck, I ended up in the transportation logistics group. And so transportation, logistics, supply chain, I came to see as a real world
Yeah.
economic development platform.
Yes.
Ultimately, for me, that is really the backbone of economic development. You don't have economic development if you don't have strong infrastructure and supply chain.
Yeah.
And so I ended up after banking, that's how I started the whole airline journey. I decided to learn how to run a complex business. I didn't go into airlines to
That
make
has
money
to be
as
the
a
most complex business.
yes, it is highly complex, super low margins, highly competitive. Everything works against you in an airline. It is the worst business to make money. Like it really,
Because like I mean, you can correct me if I'm wrong, but like essentially the airplane will cost the same no matter where you're running it because it's really expensive. And yet your margins will depend on what the customer will be willing and able to pay
exactly.
for it, and then which kind of routes you have to then figure out, right? So like having all of that is kind of like an insane blueprint. Like that just gives me anxiety thinking about what your blueprint
Oh,
is like.
it is the most nerve-wracking operation you could run, right? All to, if you run everything perfectly
Yeah.
you'll make some razor thin margin,
Yeah.
right? It's
Yeah.
like and that's even in the US, right? It's
Yeah.
hard to make money as an airline in the US.
Right. And you're
Now,
already getting paid in American
and
dollars
you're getting paid
opposed
American
to
dollars,
any
which
other kinds of dollars.
yeah, which covers your, US dollar denominated costs, right? Which
Yeah.
is most of the costs in an airline are your uh aircraft assets, which are usually highly levered,
Yeah.
right? And fuel costs, right? Which is also dollar denominated.
Right.
And so you take that cost structure into airline in a developing economy, in this case, Azul in Brazil, and you are earning in local currency
Yes,
with
exactly.
the majority of your cost
Right.
in US dollar denominated. So
That's crazy.
it is
Because your
so
revenue would be in like pesos or other, and
yeah, pesos in Mexico
then your
or
expenses are only USD, which like as
it,
Canadian we can barely afford for a variety of different industries.
so imagine even the Canadian US currency is it's not too bad. But when
Yeah.
you look at what's happened in Brazil,
Mhm.
when we entered the market, the real was probably like around 2.5, 3 or something like that. Today the real is reaching 6.
Mm.
So think about that. It's like massive devaluation. You're still
Yeah.
in local currency. And so what's happened in the Latin American airline scene is like every company going bankrupt.
Yeah.
Because at the except Azul, which is still kind of very much borderline,
It
but
exists.
it exists, is operating, but it's been tough because when COVID happened,
Right. Right.
a lot of governments stepped up to help,
Yes,
right?
our government helped Air Canada about $1 billion a day or something.
It's
Insane
crazy.
amounts.
Guess what the Latin governments did for their airlines?
I don't know because you guys have more
Nothing,
than one airline. Oh no.
nothing. So
Oh, that's hard.
LATAM had to restructure, Go had to restructure. Azul's the only one that hasn't gone through a whole restructuring process, and they've been doing it on the private side. But you know, they're paying that cost, right? So I could talk about airlines forever, but let me kind of fast forward a little bit here. So after Azul,
Mhm.
at Azul, after getting the airline off the ground, getting the capital raised, getting literally doing the project management for the launch of the airline, which was also one of my responsibilities.
How long
Then
did that take from like conception to your first launch, for example?
So it was actually record time. It was at the time it was the largest equity raise for an airline startup in history, $235 million raise.
Oh my goodness.
And because we were breaking a duopoly, literally it was Gol and Tam, they operated the
Hmm.
the market. Uh, the government was very happy to see a new entrant break that duopoly with Brazilian aircraft.
Okay.
So Embraer aircraft.
Hmm.
So not a lot of people know Brazil has one of the largest airline OEMs in the world,
Hmm.
Embraer. And so the local airlines, they didn't operate them. So there was like a natural tailwinds from the government saying, look, this is like a first airline operating Brazilian aircraft. They're breaking a duopoly. Like we had everything going for us. And then we also had local private equity that obviously, they were very influential with government. So it was record history. We got funded
Did you
in
get funding
February,
from the US or were you one of those
both.
Latin background
No,
found?
we got funded by both US and Latin American private equity
Amazing.
firms. And obviously this is, we were leveraging David Neeleman, the founder of JetBlue, and his track record. So that also helped
Right,
us
right.
raise such a large round with AAA investors. And so we got funded in February, literally February 11th. I remember because on the 12th, I was on a flight to Brasilia to submit the application for the authorities. And we started flying December.
Wow.
So it
Okay.
was super fast
Within the
for
year.
within the year,
Wow.
super fast
That is
for an
fast.
airline. Yeah,
Yeah.
yeah.
It takes us longer
And
than that to fix an intersection. So I don't know how
no, yeah.
you guys are doing this.
No, well, those tailwinds that I mentioned, that's what really allowed for us to get funded in such record time. And so after getting the airline off the ground, I was the company builder. I was a head of business development, building the businesses within the business.
Okay.
So I put together literally the bus network, the tour operator, hotels, packaging, cars, everything that an airline needs to make money because the airline itself doesn't make money. So you need to have other businesses around it.
Okay. So like referral partners.
It's other revenue generating businesses.
Okay. Got it.
So like literally different business units with different P&Ls bringing profits to the airline.
Mm,
So that is, for example, Azul Cargo. That was one of the businesses that we put together, which is the cargo division of the airline, kind of like call it a mini FedEx inside of the airline. That's what we
yeah.
built, and it's just started doing extremely well. And at that point, I was like, I'm liking the cargo logistics business more than the passengers. So
They don't submit any complaint forms at all.
and you get real margin because the whole logistics world it works with a cost plus model. You actually, since it's mostly B2B,
Right.
people understand that you need to have a margin. As opposed to airlines, which has irrational passengers, they're like, oh, that's too expensive, I'm not gonna buy it. So it's like very different customer base, right? And so and for me it also, independently if it's passenger or cargo, right, it's still fulfilling the same mission for me, which is economic development,
Mhm.
right? So I just fell in love with the whole cargo logistics world. After Zool started another started another company called Modern Logistics, and it actually is another airline, but this time with freighter aircraft. Okay, instead of passenger
It's
aircraft.
like your empire is just airlines and one
well,
fund
well,
for airlines.
this logistics company is kind of it's a logistics company that has an arm, which is an airline.
Right.
So the airline is actually just a competitive advantage for the broader platform. So we have warehouses, technology for multimodal trucking, B2B operations, and just through modern logistics started to get deeper in supply chain.
Yeah.
And I'm telling you this because this is kind of where I started to see other technologies in place
Mhm.
and their inefficiencies. For example, warehouse management systems for warehouses, trucking management systems, transportation management systems to manage trucking. And then you have different systems if it's B2B trucking or B2C trucking, long haul, mid mile. So it's like you have all of this tech. And so, but I saw that it was still not as fast, not as digital, a lot of, you know, bulky systems. And so uh, once after that, I was like, well, I could really leverage all this experience to help founders build their companies, right? Has with all this operating experience and experience seeing all this legacy technology. So that's what led me to start a VC. I started advising founders, did some angel investing, and
Mhm.
ultimately decided, you know what? I have a lot of insight over here vis-a-vis other funds that are more agnostic and are looking at everything. I was like, I think I could probably do better by focusing on what I understand, which is supply chain logistics, and finding these companies and then empowering these founders to build this what we see as a wave of digitalization and automation in the
Yeah.
supply chain.
And so, what's interesting is, so you exited as a founder and became a VC, and I also exited as a founder and became a VC. Very different. So what made your package of decision kind of factors into your decision to be like, this is the right timing right now, right? Because essentially, you could be a VC when you're in your senior years. That has never stopped anybody. So why did you feel like this was the right timing for you personally?
I think we're living at crossroads.
Okay.
COVID and this macroeconomic time that we're living right now, I think presents one of the best opportunities to invest in supply chain logistics technology. So coupled with the fact that there needs to be digitalization, now there's other elements, right? Now as a shipper, as a manufacturer, or as a brand, you need to think about, yes, cost reduction, but you also need to think about supply chain resiliency.
Mm-hmm.
Look what's going on right now with the ports. All the East Coast is frozen. Goods are not coming into the U.S. It's
Yeah.
probably going to increase inflation. Uh, these kind of macroeconomic events are going to continue.
Mm-hmm.
So with the climate crisis, with uh, future pandemics, with AI taking, substituting manpower all along the supply chain, there will be repercussions, and this will cause impact supply chain. So as a shipper, as a manufacturer, you need to think about resilience. How can I be resilient with this type of environment? So it opens up the solution so opens up the door for founders to bring solutions that provide more visibility, more resilience, cost reduction, carbon reducing, because that's another aspect. Now you have all these brands and shippers getting uh, pushed by the world to decarbonize, right? And so the supply chain is one of the biggest contributors. So they're also looking for those solutions. Well, how can I reduce costs and decarbonize?
Yeah.
So the tailwinds that we're seeing in the supply chain it's the first time that I'm seeing this in history.
Mm-hmm. No, absolutely. And that makes a lot of sense. And so do you have a portfolio company that you're particularly excited about that is taking these great steps towards this digitalization and making things a lot more efficient?
Yes, I have quite a few of them. I've already invested in about 15 and soon to be 20. We're closing another few investments right now. Uh, the first one that comes to mind is AutoScheduler.
Okay.
So AutoScheduler is a company that is reducing the carbon footprint of warehouses.
Okay.
Uh, they also are able to reduce costs, along what I just mentioned, from 10 to 60%. And so how does this work today, right? Like warehouses have these old legacy systems called WMSs. And if you talk to any warehouse operator, they're like, I do not want to change my system. Why? Because it's been highly tailored for
Mm-hmm.
that warehouse,
Sure.
right? So it's very difficult to switch. And they purposely build them that way too, just because the technology providers are like, hey, it stays there forever. Right? So what did AutoScheduler build? They built a layer technology on top of all these WMS systems, so they could extract all this data and provide AI-driven insights on how to optimize that warehouse. So
Oh,
this
okay.
is this is
So it
this is
doesn't
a
change what they already have.
it literally just makes the warehouse, it leverages all the data that's inside of that warehouse and makes it intelligence. It gives it actionable insights on what to operationally improve so
Okay.
that warehouse now runs more efficient. So
Yeah.
imagine the solution is going to be able to, they're going to be able to size the warehouse better, have the right manpower for that warehouse. Eventually, they got to expand to into another warehouse. They'll be like, with this system, we have a lot more visibility. Maybe it doesn't have to be that large. Maybe it could be smaller. So they're going to burn a lot less resources by having this technology in place. So that company's growing triple digits year over year. It's doing extremely well. So that's kind of one of them. I think that we recently invested in that kind of fits that.
That's amazing. Well, I
Yeah.
can't wait to see what they do next, and I can't wait to see what you do next. It does, I feel like it gives generalist investors like myself a lot of confidence to co-invest with you because you would have so much expertise, and your due diligence would be very different from the way that
Yeah.
we would do it as well,
Yeah.
especially on the much more technical side
Yeah. Yeah.
when
For
it
sure.
comes to the industry that were raised in, and apparently we're also educated in as well, all at the same time. So it's so
Yeah.
amazing to get to have people like you in this ecosystem, and I think that people would be very lucky to get to co-invest and be invested in by you.
It's my pleasure. We're very collaborative. We have a sister company called Supply Chain Stage, where we have events where we invite VCs and startups referred by the VCs,
Perfect.
so we could stimulate this collaboration and this ecosystem of VCs that like supply chain logistics.
Yeah. So we will link those also along with the episode link as well. So thank you so much, Marlon. I appreciate you taking the time to come and
Thank
be on
you.
our show today. And thank you, everyone, for coming on another episode of Unlocking Venture Capital.
Thank you, Sydney. It's been my pleasure.